Welcome to the compliance updates for April 2022 in the Western region. In Arizona, social equity random drawings on April 8th, 2022. So the social equity random drawing will be on April 8th, 2022, and the Arizona Department of Health Services, ADHS, will hold a random drawing on that Friday to determine the recipients of the 26 adult use marijuana established licenses available to applicants who qualify as part of the social equity ownership program under the voter-approved Proposition 207. Next is in California, and it's not really an update. There was just this really great article on California cannabis FAQ that I really wanted to share. So some things about ownership, who can own a California cannabis license, if the requirements of can you transfer any California cannabis license, and the answer is no. Licenses are not transferable. If you want to quote unquote acquire a license, you must do so through a change of ownership of the licensed business. And then as a licensee, can I lease or sublease? Again, this is no. California rules are clear that any leasing or subleasing of the licensed cannabis business is prohibited, same as many other states. And then can multiple licenses share a licensed premise? No, the rules mandate one license per premise, with the premises being the space in which the licensed commercial cannabis activity takes place, so your license diagram. The only exception for this is an S-type manufacturing license, which is the commercial kitchen model for the very small manufacturers. Multiple licenses can be located at multiple premises located at the same parcel of land, though, and they can share common areas like hallways, bathrooms, and lobbies. Some IP statements. What is the difference between an owner and financial interest owner? Is California a local controlled state? And the answer is yes, very much so. You need quote unquote local approval before receiving the state license. Local approval varies widely across the state, and the majority of cities and counties still ban commercial cannabis activity. Local approval is where California's barriers to entry really come in. And then for the distributors, do distributors have to take title to product like the alcohol industry? And the answer is no. Manufacturers and cultivators are free to sell their products directly to retailers. However, they must still utilize distributors to transport product, to coordinate testing, to undertake quality assurance checks before the produced products hit the marketplace, and to collect and remit taxes to the California Department of Tax and Fee Registration. Do medical and adult use licenses designations matter? That's the M and the A. Not really, not anymore. It's just mostly at the time of consumer that determines if it's a medical patient or an adult use that's being sold to. Of course, California regulates advertising, and one of their interesting requirements is no billboards on a freeway that crosses into another state. Can I relocate my California cannabis license? The answer is no. And can I allow an unlicensed business to operate within my licensed premise? Absolutely not. So yeah, just a really quick FAQ that I came across that I thought you all would be interested in. And on the note on the distributors too, so in episode 4 of Elevated Businesses, my podcast where I have conversations with cannabis entrepreneurs, I really break down the distribution model and the differences between California and other states. I interviewed a woman by the name of Brittany Massaro. Brittany came from Prop 215 days and transitioned into the licensed market. And she is also a co-owner of a distributor that is in LA and Humboldt. She also oversaw 45 different licenses, and she helped hundreds of businesses get permitted in Humboldt, the Emerald Triangle at Humboldt, Trinity, and Mendocino. So take a look at that podcast. It's up on the YouTube channel. All right, another one out of California, which I really found interesting, and not exactly interesting in the best of ways. So this article is titled Opinion, Fact-Checking Misleading Claims That California's Cannabis Industry is Suffering, which, from what I've seen, they are absolutely suffering. So some things in here, and I'm just going to scroll on down to their fact and fiction situation. So they state fiction, and yet today there are fewer licensed retail outlets in the state than there were in 2015. This article, which is an opinion, states, fact, California's legal retail cannabis infrastructure has been expanding steadily, reaching 1,485 retailers in February 2022. Furthermore, the state did not license retail cannabis outlets in 2015, so there is no accurate data on how many retail cannabis outlets there were in 2015. That is semantics because, yes, there was no licensed dispensaries, but there were collectives. And as we've seen in the previous article, the local approval is the main barrier to entry because there's a majority of the state at the local level has not approved commercial cannabis activity. So they can't, places where collectives were under Prop 215, now they can't even have an adult use establishment there and be a licensed retailer. Next one, fiction. Legal cannabis sales are declining and an emboldened illicit market is growing. Fact, the legal cannabis market in California is thriving. Dollar sales on the legal market are rising steadily and increased by 249% between implementation of Prop 64 in 2018 and 2021. Although there is no way to determine the actual size of the illicit market, most experts agree it is growing. Yeah. The growth, however, is driven largely by vast overproduction, much of it for export. You just said it yourself that the illicit market is growing. So, and the steady price increase, they also raised the taxes as well. So that just seems contradictory all around. Next one, fiction. Despite popular approval of Prop 64, only 85% of the state's 500 municipalities allow retail cannabis sales. A total of this is the fact that this opinion article states, a total of 281 of California's 539 cities and counties, or 52% of the municipalities, allow retail cannabis sales either at storefronts or by delivery, and approximately 60% of California residencies reside in these jurisdictions. Yeah, point exactly. Half of California pretty much. And yeah, 60% live there, but then we don't have as many storefronts as we did under Prop 215, even if you want to play semantics and use different naming conventions for a collective and a licensed retailer, doesn't matter. They don't have as much access as they did under Prop 215. Fiction from this opinion article, quote, today there are a mere 800 or so licensed cannabis retailers in the state. This means California has just 2 legal dispensaries for every 100,000 residences, while other long-established recreational markets such as Oregon and Colorado have 7 to 9 times that many. Per the opinion article, the fact that they state there are now 1,485 licensed cannabis retailers in the state for a ratio of 1 licensed retailer per 26,422 residents, higher if considering only areas which allow legal sale. In the interest of protecting the health of youth and children from aggressive marketing, getting it right from the start's principles for cannabis regulation recommend that ratio not exceed 1 licensed retailer per 19,000 inhabitants. Did you even address? I don't even think they addressed anything in their fact, but it is what it is. Just interesting because, as we know, if you have boots on the ground and you're actually interfacing with these California operators, you know it's a struggle right now throughout. So this article came by San Diego Central Region Coalition. Let's see who they are. Yeah, I'm not even too sure who this is, but yeah, I really don't think their argument is valid, especially with the semantics around collectives versus licensed retailers. I mean, there's overall less access. It's more expensive for the patients. That's absolutely known. All right, moving on to the next article. All right, in the next article for California, we are sticking to this topic. So, to this state, California's lawmakers consider legislation to increase consumer warnings on cannabis labels. So, California lawmakers are set to discuss legislation April 4th that would increase consumer warnings on cannabis labels. Senate Bill 1097, a Cannabis Right to Know Act, was introduced February 16th by Senator Richard Pan and is scheduled for a April 4th hearing in the Senate Business, Professions, and Economic Development Committee, according to the North Bay Business Journal. Some industry stakeholders have expressed their opposition to the bill, including Tiffany DeVitt, a chief of Government Affairs for CannaCraft, a Santa Rosa, California-based cannabis producer in a beautiful facility, might I add. SB 1097, quote, SB 1097 is characteristics of a lot of, quote, reefer madness type policies, end quote, she told the North Bay Business Journal, adding that more restrictive policies will only further burden legal cannabis businesses that are trying to compete with California's still thriving illicit market. Quote, the protect the children hysteria is taken to much absurd lengths that it ends up hurting the very communities it's purporting to protect, end quote. Yeah, I mean, this is so standard with packaging and labeling. I mean, other markets that legalized adult use back in 2014, they had to go through so many packaging and labeling changes, and it's just so overburdensome because a lot of these people are ordering pallets and pallets of their packaging and of the labels that they need, because if you order in those pallets, then your cost per unit also decreases. But when you change the regulations up on people, those labels are now not valid. It's very disheartening to see. I mean, I do think that there needs to be some sort of warning statements and labels on cannabis, but you don't need to keep on changing it every 2 years. And really, what California has already suffice. They've taken into best practices from other markets that have adult use and have gone through this. And in my opinion, their labels are great, and really they don't need to be adding even more red tape to an overcomplicated and costly process. All right, another update for California. So this is the Department of Cannabis Control requests stakeholders to input on equity fee waiver and deferral regulations. So the Department of Cannabis Control, or DCC, is requesting stakeholders to input and feedback on the development of equity fee waiver and deferral regulations. During the equity fee waiver program development process, DCC received feedback from the stakeholders, including equity businesses and the legislator, signaling strong interest in a more robust stakeholder engagement and input process. To implement this, the DCC will hold an information session for the public. The session will be on April 27th, 2022 at 11 a.m. DCC Equity Waiver and Deferral Stakeholder Input Session. The goal of the session is to engage stakeholders in the early development of the program, to ensure stakeholders have meaningful opportunity to shape the program, to thoroughly vet concepts for the program, and to ensure the program supports the state's goals for an equitable cannabis market. All right, we got another one for California. Sorry, this article has a lot of busyness happening, but let's dive into it. So the article is called No April Fools. Starting April 1st, cannabis operators face CEQA compliance requirements for state licenses. And I'm already running into this with clients. Full transparency, I'm just referring them to a CEQA specialist because there's just so much with CEQA. CEQA is the California Environmental Quality Act, and it's a really robust program and something that's really been the difference between provisional and annual licenses. In California, the other problem is CEQA requires the local municipality to establish their regulatory framework around CEQA, and a lot of counties, specifically Mendocino, have not implemented these regulatory framework requirements yet, so this potentially is putting licenses in jeopardy. But let's dive into this a little bit more. For many in the cannabis industry, April 1st, 2022 is seen as a day of reckoning following the July 2021 passage of Assembly Bill 141 and Senate Bill 160, collectively the Cannabis Trailer Bill. In an attempt to transition to an annual licensure program, which, just to back up a minute for people that are not in California and don't know the differences. So California implemented something called a provisional license and an annual license. The provisional license, during that time, that was when Metric essentially started with a lot of these licenses, was when they received their provisional license. And it also did not require them to meet CEQA requirements. It's once when you receive an annual license. So an annual license is like your standard cannabis business license that you receive from the state that you're used to receiving in any state, and you have to renew each year. That's what an annual license is. But that annual license, you also have to meet your CEQA requirements. So back to the article. So that trailer bill is an attempt to transition to an annual licensure program. April 1st marked the beginning of the end of the provisional cannabis licensure. It also ushered in significant changes to renewal process for previously granted provisional licenses. These modifications now require applicants to comply with California Environmental Quality Act, CEQA, a complex statewide policy of environmental protection fraught with potential traps for those unversed in the law. Before an operator is eligible to be awarded a cannabis state license, this requirement alone carries the potential to create a much higher barrier to entrance into the cannabis market. Agreed. I do think that we need to have environmental standards, but this is a really big challenge and something that's been looming over the entire adult use market's head since it was implemented. So we'll see how this all shakes out. All right, and that was my last update for California. Now I'm moving on over to Colorado. Mike Tyson's ear-shaped cannabis gummies, a no-go in Colorado. So Mike Tyson won't be allowed to sell his human ear-shaped cannabis gummies in Colorado. His company, Tyson 2.0, introduced Mike Bites earlier this year as an homage to his notorious fight with Evander Holyfield. In 1997, Tyson bit off part of Holyfield's ear during their WBA heavyweight championship bout. The gummies even depict a small bite mark around where Tyson chomped Holyfield's ear. How ridiculous. But Colorado state law prohibits cannabis edibles from being shaped like humans, animals, or fruits. According to Huffington Post, the law is meant to prevent products with shapes that could attract children. Not to be discouraged, Tyson 2.0 has a plan to sell cannabis gummies in Colorado. Instead of a human ear, Mike's Bites will be shaped like the letter T when they arrive in the state later this year. All right, and shifting on over to Montana. Montana sales approached 73 million. On April 6, 2022, the Montana Department of Revenue released the state's estimated cannabis sales based on data pulled from the seed-to-sale tracking system, Metric. Through March 2022, the cannabis industry generated 72.9 million in sales, which works out to be about 9.88 million in estimated tax revenue. The adult use market accounts for a bulk of the sales, with more than 43.5 million sold year to date. Congratulations, Montana. All right, and then in Nevada, the Nevada Cannabis Compliance Board, CCB, will hold a public hearing for the purpose of considering the proposed adoption, amendment, and repeal of Nevada Cannabis Compliance Regulation 12.065 on May 24th, 2022. All right, sticking to Nevada, Nevada police are exploiting marijuana scheduling loophole to make arrests despite legalization, ACLU-backed lawsuit claims. A new lawsuit being backed by the Nevada chapter of the ACLU claims that the state's drug code unconstitutionally continues to list marijuana as a Schedule I drug, enabling police to continue to arrest people over cannabis despite the fact that it's been legalized for a medical and adult use in the state of Nevada. The suit targets the State Board of Pharmacy, which has scheduling authority over controlled substances. Plaintiff says that because the board has failed to remove marijuana from Schedule I, people continue to run the risk of being prosecuted for felony crimes such as possession of cannabis with intent to distribute. Police have allegedly exploited that legal loophole, even though the state constitution recognizes the medical value of marijuana and voters approved adult use legalization at the ballot in 2016. Quote, "This is what the police departments are doing. They actually charge people with possession of a controlled substance with the intent to sell, even if it's cannabis," end quote. Remick, an attorney with ACLU of Nevada, told Marijuana Moment in a phone interview on Monday. That's outrageous. All right, moving on to New Mexico. New Mexico's Ultra Health reflects on the first day of adult use sales. So New Mexico launched its adult use cannabis market on April 1st and recorded 1.96 million in sales during the first 24 hours, leaving Ultra Health, one of the state's vertically integrated cannabis operators, wondering if supply will be able to keep up demand in the early months of the program. Wow, sounds just like New Jersey, doesn't it? Quote, "We saw a lot of folks turn out to participate in the historic day in New Mexico and cannabis history." Quote, Ultra Health Chief Marketing Officer Marissa Noble tells Cannabis Business Times, quote, "And while it's certainly a milestone to be celebrated, we are cautiously realistic about what will happen in the coming 12 and 24 months, end quote. Noble says that the nascent market is, quote unquote, very volatile, which I agree, and ultimately dependent upon the state's cannabis operators having the production capacity to keep up with the demand. And in a state where regulators have set production limits on cultivators, she says supply will likely become an issue and very soon." Standard, all new markets. This is always what happens. One day we'll figure it out, right? All right, moving on over to Oregon. Okay, so Oregon released a new technical bulletin focusing on new marijuana edibles FAQs, increase in potency to other products, and daily sales limit modifications. So beginning April 1st, 2022, edibles sold through OLCC's licensed stores can now contain packages of up to 100 milligrams THC and 10 milligrams THC per serving. It was 50 milligrams and 5 milligrams respectively, which is just absurd. It took to this time to implement this, but whatever. The previous limit, like I said, was 500 milligrams THC per package and 5 milligrams per serving. Under OLCC rules, edibles containing the lower THC amounts remain available for sale. The change aligns with the potency allowances for most other states allowing the sale of adult use cannabis. Duh. Solid edibles that exceed 55 milligrams THC in the package must now be scored so that it's easy for a consumer to determine a portion size. As an example, a chocolate bar could be scored or marked up into 10 equal portions, or a bag of gummies could contain 10 individual gummies containing a portion of THC. Homogeneously, of course, which they left out there, but I know is in the regulations. To date, the LLCC has approved labels for 30 products containing 100 milligrams edibles, including chocolate bars, cookies, cereal bars, and gummies. With increased THC potency comes an increased effect from using the products. Of course it does. They then provide direction along the Oregon Poison Control. In most recent data available from 2019, 34% of the 386 calls to OPC about cannabis exposure were due to edible consumption. All right, and then just to unpack the purchase limits now. So effective April 1st, 2022, marijuana edibles have up to 100 milligrams THC in the package and 10 milligrams per serving. Several changes were made to the retailer's daily sales limit in OAR 845-025-2800. These changes became effective January 1st, 2022. So retailers may now sell 2 ounces of usable cannabis per adult use consumer per day. Previous limit was only 1 ounce. The limit on sales of cannabinoid concentrates or extracts were simplified to 5 grams of cannabinoid extracts or concentrates. And retailers may sell 5 grams of cannabinoid products intended for inhalation. Examples of cannabinoid products intended for inhalation include infused pre-rolls, moon rocks, or inhalable cannabinoid products with non-cannabis additives. For example, a retailer may sell an adult use consumer in one day 5 grams of cannabinoid concentrate or extract and 5 grams of cannabinoid products intended for inhalation. While cannabinoid extracts and concentrates may be inhaled, there are not cannabinoid products under the OLCC's definition in OAR 845-025-1015. Awesome. And there's some more resources in this bulletin if you need them. Good work, Oregon, increasing those limits. All right, we got another one out of Oregon, and this is a new license moratorium. So some background. On April 4th, 2022, the governor signed into law House Bill 4016, establishing a licensing moratorium on all marijuana license types except for laboratories. The HB 4016 moratorium applies only to marijuana licenses and does not affect worker permits like the employee badges, research certificates, or hemp certificates. The moratorium is in effect from January 1st, 2022 through March 31st, 2024. All applications for new licenses received in that time frame will be inactivated. Yeah, they're trying to figure out their oversupply problem, that's for sure. In Washington, and the next few updates will be for the state of Washington. So the LCB released a frequently asked question document, FAQ, to provide clarity on the implementation of new quality control rules and timelines. So here is what we're looking at. The document right here, which lists a bunch of different things. So how long can this product be sold to retailers? Does the product have to pass pesticide testing? Can I test my previous product for pesticides only? There's a bunch of different quality control questions and answers in here. This is 3 pages in length, so make sure you take a look if you're in Washington. The LCB Board Action, Social Equity in Cannabis Proposed Rules, New Rule section. So, approved proposed rulemaking CR 102 regarding amendments to existing rules and a new rule section that would establish the Social Equity in Cannabis program in response to recommendations of the Social Equity in the Cannabis Task Force and other statutory requirements. The proposal creates a regulatory framework for the distribution of licenses that are currently available from cannabis retailer license that have been subject to forfeiture, revocation, or cancellation by the board, or cannabis retailer licenses that were not previously issued by the board, but could have been issued without exceeding the limit of the statewide number of cannabis retailer licenses established by the board before January 1st, 2020. The proposal also changes the word marijuana to cannabis throughout the rule sections to implement second substitute House Bill 2S HB 1210, Chapter 16, Laws of 2022. Awesome. I love when people update their naming conventions from marijuana to cannabis. Alrighty, and my last update for you today, the joint LCB and DFA message regarding cashless retail transactions. Holy cow, is this a situation? So, in the wake of recent robberies at cannabis retail stores, the LCB has engaged elected leaders, law enforcement, and state agency partners to discuss how to reduce cash and risk in retail locations. One key agency partner in the Department of Financial Institutions, DFI, which regulates financial institutions in Washington state. LCB rules allows certain cashless transactions. While retailers want to reduce their reliance on cash transactions, options are limited. While cannabis remains a Schedule I controlled substance, and the federal government does not act to allow banking for cannabis transactions. However, there are cashless options available that some retailers are currently using. This message is intended to clarify that certain cashless transactions are allowed. So before I read the rest of this article, I do want to plug the podcast on 2 different guests that I have had on. So episode 2, Chris Eggers, who is the owner of CC Security Solutions, really has in-depth knowledge on cannabis security and really knows how a criminal thinks. He had previous experience in law enforcement, before I get any gripes about that, he did turn in his badge. Like, he turned it in to come to the cannabis side. Yes, we hear previous law enforcement and we want to ban them from the industry, but there are other veterans in the industry that vouch for him. And because I trust them, I trust Chris. And I've now been working with Chris on multiple different projects and his expertise for cannabis security. So I definitely suggest taking a look at that podcast. It's episode 2 of Elevated Businesses. You can find it on YouTube or on any podcast streaming platform. The other episode, which will be released the week of May 1st, is with Rose Elliott. So Rose Elliott, she is the owner of Complied. Complied is an API first compliance software that specifically helps people that are building out technology systems to retrieve all of the regulatory data and to help them expand into new markets easier. Her background is actually in like PayPal, Stripe, Tenable, Upwork. Upwork, because if you're not familiar with the platform, it's a where you can hire different contractors to do like video editing and illustrations for marketing and all of these other contractor things. And you can hire people internationally. So when you're exchanging money through different countries, there's a whole set of regulations. But really, she dove into a lot of the compliance aspects that PayPal had to implement because they are international. They're a global company. So those are 2 really great podcasts to check out because Rose really unpacks all of the nitty gritty when it comes to payment sales transactions and the payment gateways that we do or don't have in cannabis. But back to the article. There is a current concern in the industry about what kind of financial systems are allowed for retailers. The LCB developed WAC 314-55-117 to clarify what is allowed, but awareness of the rule has been slow to take hold. Essentially, the rule allows retailers to engage in business with third-party vendors to allow for cashless transactions with customers. Transactions may be conducted through an app on the customer's phone. On the customer's phone. That is a really big tip point of this regulation. In an effort to provide certainty for retailers, DFI has posted to its website lists of depository banks and credit unions and non-depository institutions that provide these services. DFI will continue to add businesses to this page as they become licensed, or in the case with some, DFI determines a license is not required.